Good morning, everyone, and welcome to the European Crossover webinar. And we have gone and seen the euro strengthen a bit here. We're seeing the cable also better levels, although coming off a bit from those better levels. We've also seen the equities going and pare back a bit. We'll go and take a look at the equities rather quickly. You can see here that we're just paring back a bit. We had seen a pretty good run up in here in the NASDAQ, as well as the S&Ps. NASDAQ fueled by the move in Microsoft, which is able to go on and bid on TikTok and also much higher movement in the video, which has not had look on here, which has not had out its earnings report yet. Going pulling back just a bit here, actually coming into 2-day VWAP on the NASDAQ futures. And as I mentioned, we did go and get the euro up here. Euro's up here at 17.85. Did trade as high as 18.03. We're just easing back just a bit, not a whole lot. And on the cable, we've gone as high as 31.05. Same thing, easing back just a bit at 30.82. We'll go and take a look at the economic data. We did get overnight Australian retail sales, which came in a bit better than expected. They were expecting 2.4, came in at 2.7%. Also, they did go on and keep the cash rate at the same for the RBA. Now, at the top of this next hour, we will have Eurozone Producer Prices Index. And as we come to the U.S. session, we're actually going to have New Zealand dairy prices. Then we'll have market manufacturing at 9:30 Eastern, as well as ISM, New York Index and business conditions at 9:45 Eastern, and durable goods at 10 a.m. Eastern, along with factory orders. And here we are at 1790 here with the euro. And this is on the 2-hour chart, and it's already moved. Saw a nice little rebound off those lows yesterday. I think we had our bias chart support here at 1717. They dipped just a hair under 17 and then saw a pretty good rebound into the close up to 1760. And we've gone and added on to that, coming up here to as high as 1803 before, just gently paring back a bit. And with the cable, just poked its head just above 131 and just easing back just a bit here also. Cash dollar index did make it. Yesterday, our bias chart resistance was 93.91, and I think we made it just a hair above that. And then obviously now we've come up here almost all the way up to 94 cents before easing back here. Coming back as low as 93.27. I think we still have 93.17 as our bias chart resistance. You can see the move that we saw in Apple, quite the run here. And same thing here with NVIDIA. Taking a look at the Australian dollar. The Aussie and New Zealand dollars edge up as the RBA says to buy more bonds. The Australian and New Zealand dollars edge higher on Tuesday, and bonds should get a boost after the RBA said it would again step into the market to buy government debt to keep yields down near its target. The Aussie dollar inched up to 71.34, though it remains short of a 17-month peak of 72.27, touched last week, and immediate support comes in around 70.77 and 70.40. The Kiwi firmed to 66.17, again short of a recent 7-month top of 67.16. Support lies at 65.75. The RBA surprised nobody by keeping rates steady at a quarter basis point in its August policy meeting, but did please debt traders by announcing it would buy bonds on Wednesday in its first purchase in months. Back in March, the bank committed to buying as many bonds as needed to keep the 3-year yields near a quarter basis point, since it has only rarely had to act. But yields had drifted a little higher in the last few weeks. Given tomorrow, the bank will purchase AGS in the secondary market to ensure that the yield on 3-year bonds remains consistent with the target. In response, 3-year bond futures firmed 2 ticks to 99.72. The RBA also reiterated the COVID-19 economic downturn had not been as severe as feared, but cautioned new lockdown in Victoria State would have a major impact to growth. Domestic data on Tuesday showed retail sales bounced again in June, but volumes were still down a steep 3.4% for the second quarter. The outlook has been further darkened by the tightening lockdown, which will hammer the service sector even as it fuels online spending. We estimate the total potential to hit GDP will be at least 10 Aussie billion dollars, and or more than 2% of the national quarterly GDP, and probably closer to 16 billion or 3.5% of GDP. There's a downside risk to the outlook. That in turn will eat into the tax revenue and likely prompt yet more stimulus spending, so lifting the already massive $240 billion of bonds the government plans to sell in 2021. Okay, and the Forex dollar stumbles as investors await U.S. stimulus breakthrough. A rebound in the dollar faltered on Tuesday as political wrangling over a U.S. relief plan and the gloomy economic outlook kept investors shy of the currency. After its worst month in a decade in July, the greenback started Wednesday on a firm note as some investors trimmed their short positions, pushing the currency as high as $16.95 per euro on dollar, 1.8% above last 2 weeks year low. However, that only carried so far as it settled back into the 1766 in Asia on Tuesday, while the euro and other majors also lifted from throws. The Aussie edged again to 71.34 after central bank offered no surprises by holding policy steady. Despite encouraging lockdown new virus cases, the better than expected manufacturing data, investors are reserving judgment on whether the U.S. economy, with 30 million people out of work, can really lead the world's recovery. We're still in a situation where the market wants to believe the recovery is on track, but is still worried about the COVID situation. The local fiscal wrangling in the U.S. is the next key test for sentiment. And if they manage to get a deal done, which seems likely, that could be supportive of risk sentiment. Top Democrats in Congress and White House negotiators on Monday said they had more headway in talks on the latest coronavirus relief bill. And though an expired $600 per week unemployment benefit remains a sticking point, it's Not clear whether the agreement would be enough to shift the market perceptions that the U.S. economic recovery lagged those of Europe and Asia. The historically extended long positions in the euro is dry tinder, but there's no spark to trigger a more significant reversal yet, said OCBC bank strategists. And we are still in the hazy signals about the potential turn in broad dollar prospects. A better than expected expansion in the Institute for Supply Management's U.S. Manufacturing Index was a bright spot for the dollar overnight, but it came with a warning output that remains for pre-virus levels, and the employment index was below forecasts. The recovery cannot accelerate with the virus still not under control in large segments of the global economy, said Deutsche Bank's chief strategist. We expect more risk sensitivity to the August data. Now that the easy part of the bounce back from the lockdowns is done, the U.S. has a second straight week of slowing indications last week, but a fourth week in a row of rising deaths, Reuters analysts found. Cases are on the march again in Europe. In Australia, second biggest city of Melbourne announced a curfew and fresh restrictions on movement to suppress an outbreak there. The recovery is unlikely to be uneven and bumpy. The Reserve Bank of Australia said its policy statement on Tuesday, forecasting Melbourne's lockdown to push unemployment to about 10% later in the year from 7.4% in June. Elsewhere, the yen was stable at $6.04 while the pound hung on to most of July's gains on the greenback at 30.79. And you can see here the dollar has actually slipped below 106 here. And with that, we'll move on to the analysis. Okay, the euro pared back, finding support at 17, rebounded to 17.60 on the close. Resistance will be 18.05. We just saw that. The high was 18.03. So this once again, I was just going by a level. If we take a look at the daily, and all I did was going off with this high there, and that's what I was coming up with the 1805. But you can see on the daily, boy, what a run this thing has had. We did put it in like a hammer, but anyway, nonetheless. 1805 was supported 1696. And on to the cable. Cable following a gravestone dojo on Friday's close, the market paired back to 130 before rallying back to 131. Resistance will be 31.10 with support at 29.79. And high today was 31.05, so 31.10. And support at 29.79. On to the Aussie dollar. So the Aussie pairs back, holding 70.70, rallying back on the close. Support will be 70.26 with resistance at 71.58. So 71.58 is going to be our resistance. With support at 70.26. And on to the Kiwi. So the Kiwi slides back, finds support at 65.75 before rebounding to close above 66 cents. Support will be 65.32 with resistance at 66.39. And on to the dollar CAD. So the dollar CAD continued to hold support above 33 even. Support remains at 33.40 with resistance at 34.70. So no changes here in the dollar CAD. And on to the dollar peso. So the dollar peso closed higher above resistance of 22.54. Resistance going forward would now be 22.83 with support at 22.30. And on to the dollar yen. The dollar yen's bias chart resistance is 647, held as the pair pulled back to 106 even. Resistance will remain 647 with support now at 562. Well, actually, no changes there because that's what we had since yesterday. And that 647 held well. You see that just going with the levels. And onto the cash doll index. So the dollar index resistance was 93.91 held. Immediate support will be 93.30. We actually dipped just a hair below 30, but we're back above it, with resistance remaining at 93.91. So 93.30. But we'll keep the resistance at 93.91. With that, we'll go and move into the cross rates. And slowly but slowly, we're just kind of edging down here with the dollar, with the Kiwi yen. We had our support here at 69.52. We're going to go and start to move that a little bit lower, although we're still holding above it. But potentially, we can look for a move down here to 69.25. Not saying they'll hit it today, but looking forward, looking out, I should say, it's going to be right there at 69.23. And resistance can be 70.44. On to the euro yen. Well, we had a bit of a long-legged doji here from yesterday. Generally, when you get a move like that, bulls don't have control, bears don't have control on the actual bar itself, which generally you'll see a pullback in whatever's been the prevailing direction, which is clearly the prevailing direction has been higher. But we've actually seen it work a little bit higher so far. But resistance is going to be 25.06, and it's going to remain still 24.01, at least for now. So no changes here. We'll just be looking for that to be capped within this range, but we'd look for this market to work back towards 24.01. Looking further out, support would come in at 23.69 once we break 24.01. If we go and do that, certainly would suggest that that's where they'll be looking forward. Moving on to the euro odd. No changes here. The upside still remains 65.81, with the downside at 63.41. We're still hanging around here. I'm going to move that up now to right here at 63.93. 63.93. Still a ways back, but I think 63.93 is going to be right. Well, actually, right there. 63.97. Let's go with that. And let's go into the Euro Kiwi. Same thing here, no changes in the Euro Kiwi. On the upside, we're looking at 78.80. You can see that clearly. And on the downside, 76.24. We'll actually move that up to this bar right there, which is going to be 76.62. And with that, we'll go and move into the Aussie yen. A quiet session yesterday. Look at that. No movement whatsoever. So this is obviously going to remain the same. 76.35 on the upside. And on the downside, 74.85. A little bit closer towards the downside, 76.35. Maybe a bit of a stretch, but that'll be resistance. And with that, we'll go move into the guppy. Relatively quiet session here, also here. On the upside, we had 38.72. And on the downside, 36.34. We're actually going to move that up in here on this close right there, which is going to be 37.11. And let's go back to the Aussie yen. I think we had tried to move that. And we said 74.85. And we may be able to test on both sides. Gonna go right there at 74.52. And lastly, let's go to sterling odd. $84.03 continues to remain resistance, and support we had at 82.21, and that's right there. Yeah, there we go. It's actually 82.22. I don't think one pip's going to make a difference, but we'll mark it off. And taking a look at gold. Still holding it rather strong here. Looked like we were open for a pair back, but obviously last week when Trump started tweeting about delaying the election, that really got the dollar into some trouble and gave this an extra little boost, which I think we would have been able to pare back a bit. Maybe not a whole lot, but enough to slide back, challenge 1926. So we're holding up here, but we'll have to keep an eye out on this. If we wanted to really take off beyond 2000, I think we would have already been doing that and pushing for another leg. But like I said, with that weakness we saw on the dollar, I think it started on Wednesday. After it already started to recover and we took a slide down, it really opened the door for the gold to go right back up. Although we're not making the most of this move here, we could be open up to extended legs. So we haven't done a whole lot yet with gold. Still certainly very bullish, but once again, just a bit susceptible. Just have to keep an eye on it here. Okay, and then looking here with the NQ, we did pair back a little bit here, although we're still way up here in the stratosphere, but still holding. And same thing here with the S&Ps. They almost look as a mirror of each other almost. Look at that. And crude oil did go on and recover from those lows that we saw on Friday. We talked about the support at 39.73. We did rally up to above here at 41.20 on the strength of equities. And that'll be it. And thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.